Happy Sunday. Right now, the Vikings are up against the Packers 17-0, so it is a pretty damn good day. Guys, ladies and gentlemen, multiple people have been asking me to put out a video going over what my strategy, so to speak, is and is going to be for this 1K challenge account. So I figured it would take like 8 to 10 minutes and just sort of outline what my strategy sort of looks like, specifically talking about scalps, which is our day trades. And we'll sort of dive into it. In case you haven't kept up, I post videos every single day reviewing my trades and stuff. And if you're looking for an AMC update, it went up on Friday. For those who are looking for it, I have nothing else to add until there's new price action to be able to take a look at. But nonetheless, I am bullish in case you're curious. So let's just start off with this. My scalp trading strategy. I've got sort of a four rule process, and it goes as such. Number one, myself, I take no greater than 20% of my portfolio in any single trade. And I give myself that much leeway and in terms of portfolio allocation because I have an extremely tight stop loss. You're going to see that as we sort of walk through what my stop loss points are as we go through rules 2 through 4 on any scalp setup that I may be taking on any given day. And that comes into rules 2 through 4, which is to have a goal entry point, have a goal stop loss point, and have multiple goal profit taking points. And the purpose of this is very straightforward. My dad once told me when I was a young buck, I think I was out mowing the lawn, and he came out and he said, Trey, if you fail to plan, then you plan to fail. And I think the reason he told me that is because I didn't fill up the lawnmower and I had to walk a couple blocks down the town and get some more gas. But nonetheless, it's very true. If you fail to plan, then you plan to fail. So if you come into any sort of trade blind and you don't have a plan for the best case scenario, the worst case scenario, and average case scenario, they're going to be caught off guard. And you're going to be making a decision from emotion instead of from rules, instead of from discipline. And that's really what we have to do here when we're taking trades. And having a goal entry point, stop loss point, and profit taking point creates a differential. What it does is it takes away that emotional aspect of trading, which can make this gambling, and it turns it into a job, right? My job is to execute perfectly in one of 3 scenarios. Let's say number 1 is the best case scenario, which is this thing goes up 100, 200, 300%. Let's say number 2 is an average case scenario, goes up like 10, 20, 30%. And then number 3 is I am wrong. My job is to be able to analyze a situation and say, this is the scenario I'm in. Here's what I have to do to execute it flawlessly. That's what we need to focus on, is perfect execution. And now, while we're never going to be able to do that, it's something that we should strive for, and having rules will accomplish this. So having a goal entry point, goal stop loss point, and multiple profit taking points is going to help us out in the long run. So we move on to the next thing. What will I end up taking trades on? And if you've tuned into the live streams, you've seen me do it. But the most simple way possible, it's just technical patterns, and that's basically it. I don't take EMA crossovers. I don't take trades off the open. I don't take random shit. It's all the same thing. And at the end of the day, what it comes down to is I see a rising wedge, a falling wedge, a head and shoulders, a cup and handle, a rising channel, falling channel, whatever it is. I just want to have very clear, distinct entry, stop loss, exit, profit taking points. And I find that is the easiest thing to do with technical patterns. If you're curious on how to read technical patterns, I have a free masterclass that's up on YouTube right now. If you type in charting masterclass, I'll be one of the first videos that pops up, so you can certainly check that out. And it'll go over some of the patterns that I take, but I'll show you as an example with Apple here in a second. I just take technical patterns. That's really it. I play the game of probability. So I play calls and puts on trend lines and play that game of probability and let math speak for itself. And what I mean when I say let math speak for itself, play the game of probability, is channel trading is very straightforward. Most of the time when you're touching a level of support or resistance, this would be resistance, this is support, the most likely outcome is a bounce. Now, you do typically get breakups and breakdowns, and there's situations where we would have a bias, right? So if you look at Apple, for example, we can see that this is in a rising sort of support situation with a rising level of resistance. We get an idea this is a rising channel. Eventually, it's going to come to the downside. So we can play puts off the top level if we'd like to, but nonetheless, right, it comes down to a very simple sort of mannerism, and that is to play puts on resistance and calls on support. This isn't something I'm telling you to do. This is what I do because I find it has the greatest statistical probability of profitability. And we look at this, and you're going to see exactly what I mean. So how long do we channel trade here? 1 tap, 2 tap, 3 tap, 4 tap, 5 taps before it finally broke down. How about the top? 1, 2, 3, 4, 5, almost 6, 7 different touch points before it broke down, right? We play the game of probability. And in the situation where we're wrong and it doesn't respect the channel trading, I just stop loss out, which brings me into the next really important thing. And then we're going to talk about this in a bit, but as I mentioned before, I typically play calls on the support line anticipating a bounce, and I play puts on the resistance line anticipating a bounce, right? I just play the game of probability. That's it. It's not crazy. It's not sexy. It doesn't net me crazy returns. Blue chips are very boring. I typically play blue chip stocks like Apple, Tesla, AMD, Nvidia, the SPY, sometimes the Qs, right? But it works. And this is a system that works for me. And I think it's important now that you mimic me, but that you recognize that rules and discipline and consistency are what are going to bring us forward at the end of the day. Here's my stop loss rule, right? I already went over sort of what trades I take. Now let's go over what it looks like for entry, stop loss, and profit. For a scalp, I do not let myself hold if this takes place. If a 1 minute candle opens and closes above or beneath my entry trend line, I fully exit or stop out of my position. So as a hypothetical, right, let's say that I grab puts right here on Apple, and I'm going to zoom in just so you can see exactly what I'm pointing at. I decide, hey, let's take a put the second that this touches that trend line, right? Bam, I'm in puts. All right, so at this point, my stop loss is very straightforward. If a 1 minute candle opens and closes above this resistance line, I completely stop out of my position, and it keeps things extremely tight. Now, do I get juked out a lot? Do I get stopped out a lot? Yes. Ask anybody in chat. This happens to me quite frequently. However, I'm never going to regret this because it keeps my stops very, very small. I get stopped out of positions typically like 3%, 5%, sometimes 10% red, but usually like 3 or 5%, which is very, very tight. It keeps the profit in the pockets, and then when you're on the right side of things, you're not having to make back crazy losses, right? And the opposite way, if I was to play calls right here and a 1 minute candle opened and closed beneath my entry support trend line, and I'd take an entry right here, the second that it taps that, right, I stop loss out. That's as simple as it is. I stick to that pretty much religiously. You're not going to catch me doing much different because rules are what bring us consistency, and consistency brings us profitability. Here's my entry rule. I don't take the trade unless it reaches my designated entry goal. And if you're curious on what my designated entry goal is, it is always 10 times out of 10 just going to be a trend line, right? I play calls on support and I play puts on resistance. And typically I like to have a bias. And in this example for one, right? If Apple right now is on a rising channel, I'd probably take a put bias versus if it was in a falling channel. But nonetheless, I keep it pretty straightforward. We know that the game of probability, we typically see bounces off support, bounces off resistance. We want to take advantage of that range, that technical pattern as things continue to move. That's it. My profit rule is very simple. I scale out of trades and I don't let green trades turn red. My motto is simple. It is make money, don't lose money. Even if you're only up 10%, it is okay, especially day trading, especially scalping options, to take profits because there is risk in options, right? You can lose all of your money if you're not careful. You can have every single dime you invested into them expire worthless. And this isn't something that's great, right? So because of that, we want to be very quick on our feet. And that comes down to not letting green trades turn red and scaling out, which means taking profits along the way. Right? We want to lock in as we go. That means sometimes I take profits when let's say I've got 5 contracts on SPY, right? I'm up 10%, I take a contract out. I'm up 20%, I take a contract out. I'm up 30%, I take a contract out. I'm up 50%, I take a contract out. And then maybe I leave that last contract to run for potentially 100, 150, 200%, right? It could make more if I held it all the way through, but I don't give a shit. And I don't because it's more important to lock in as we go and be consistently green. 8, 10% gains on a portfolio is going to bring you a double up on your port. 12, 10% gains in your portfolio, you'll have tripled your portfolio, right? Small gains add up over time. And this is something that I'm going to really, really double down on. And that's really as simple as my strategy is. It really just comes down to consistency, sticking to a set of rules. These are the rules that I find work the best for me. You have to come up with what works best for you. However, the last thing I'm going to say is if you're going to day trade options, just make sure you know what you're doing. Please, before you start, paper trade, do some research, do some digging, and don't play with money that you're not willing to lose because probability speaking, statistically speaking, most people do lose money when they trade. And that's about that. So these are my rules. That's the principles that I typically play by. And yeah, I guess that's there if you ever want it. So that's about it. I'm going to go back to watching the Vikings game. Appreciate you guys. Much lovely taps. Peace.